Now it's time to look at a low time frame reversal trade. So we're looking at GBP/JPY on the hourly time frame, and what we can basically see is a downtrend. We have lower lows, lower highs, and we come in from this spring, but then what we actually did was break through a structure point here. So the first basis of this trade is just to see that we have broken the structure. The market could potentially move up, but we are also trapped between a supply zone and it could potentially move down. So here the hourly time frame is not telling us too much, but we've just entered the London session. What we can do is go a little bit lower to the 10 and 15-minute time frames to actually see what the market is up to here. So looking at the 15-minute, I can see that price actually came into this little zone here, wicked in, and started to make a push to the upside. So I can drop it a little bit lower and look on the 5-minute, and I can see there on the 5-minute we could potentially refine that zone down to this candle here, or down to the blue candle as well, where it just lightly retested. But the main premise of this trade is going to be, okay, we've seen the market come in and hit a demand zone. It's now made a push up, which has broken through these smaller structure points here. But we don't have any clear direction yet, right? We could either trade up into this area, or we could trade down a little bit towards this demand zone here. So right now the price is in a little bit of a limbo stage. If we go to the 1-minute time frame, we can begin to refine some of this price action. And what we will see here is we had the retest, then we had a large impulse. The final reaccumulation before the impulse was this zone here. So we can scale the demand to this area here. And basically what we have now is an imbalanced price area beneath, and we also have an imbalanced price area above. So to start with, we just want to get a feel for what the market is doing and where it is possible for the market to go. Now this, we could either see that the market is likely to go either into this area, or the market is likely to go into this area from where we're trading right now, because we are going to fill one of these imbalances one way or the other. And even though it is a little bit tricky on the hourly to decide which way this is going to go, when we scale it down to this range, we have a pretty clear idea. We have two opportunities, right? We can see price has actually just pushed through this kind of supply region here, just about, and we form these two almost equal highs. So what we may want to see is if we can break this high, we could look for a push up and then a pullback, and then we could buy into this area. And on the flip side, if the market breaks down under these lows, we could look for a pullback to then sell into these areas. So we just give ourselves a couple of scenarios, and then we can go and work with those scenarios when the market decides to give us something. So from this point, watching the market, we see the market has broken down through this first low. This wouldn't actually be enough to indicate me into a trade, but what this gives us is a zone that is showing the strength to break structure. So we can mark this little zone out here. That's that final reaccumulation or redistribution area before the market broke structure. But for me to really be confident in selling this, I would also want to see this demand zone fail as well. Okay, if we can see that demand fail, we could happily then sell into this market because we'll see that the market is indeed breaking down. So I'm going to mark this out as a low. And now we know if the market retests, pushes up, that's bullish because we've hit a demand zone and broken, first of all, past this previous structure that we broke, and then second of all, past the most recent higher high. If we do break down though, that shows demand failed, and it shows 1, 2 breaks of structure, leading us into an imbalance where we could trade into this area here. So just to let in price play out a little bit, we do see a breakdown of that secondary low, as we can see happening now. So what we could do is go ahead and place a short order on here to follow the market down, because this second scenario has actually played out, right? We had the breakdown, and now we have a clear little target to take price down into that. Now for stops, I would just want to clear this area really. You could put it into this candle. I would actually opt to put it over that level there, just in case we come in for a little tap of that zone. Obviously, it's just better to be safe than sorry, from my personal experience anyway. So I would go ahead and put my stops over this. That's going to be a 3.8R trade, which obviously is not the biggest risk-reward trade, but it's a very small opportunity and one that could be done within a matter of minutes. So letting the market play out a little bit now. Obviously, if it does fulfill the target before we get tapped in, it's not a trade for us. But if we do get an entry secured on this one, we could then just ride price down. As you can see, we get tapped in there. And now we can just ride price down towards this target. When we break some lows, we could then go ahead and go to break even. So once we had this first initial break through these lows here, we could go and move the stop to break even so that we don't have any risk on this position. And then we can just hold it out and see how it does. Obviously, we could go ahead and do some of that stop trailing as well that we spoke about if we wanted to. But on a very low time frame trade, we may just want to go break even and then let it roll. And as you can see, the trade was fulfilled for a 3.8R profit, which is going to be on those 0.5% risk moves, a 1.8% profit within a span of 42 minutes, which is not bad for a day's work. 1.8% profit if you think about that on a larger account, a full-size trading size account. So, either a funded account or a personal account of say 50,000 plus, that's going to be a very nice profit there for you for the day. If you're looking at 100,000, you've just made over 1,000 in 40 minutes, and you can then just leave that session and come back tomorrow, unless there are obviously other very clear trades around. But that is a nice example of a little reversal trade. Very clear and systematic there. Just looking to follow the little flow of orders within the 1 minute structure and work out, okay, we found a range, we have imbalance below, we have imbalance above, and we can actually now look for one of the opportunities. We could either look for a confirmation, but if we don't get a confirmation and instead we get a breakdown, that is then going to be a reversal. Okay, so we have higher high, higher low, higher high, lower low, lower high, selling it off. So we have that exact same thing that we've spoken about in the trade types video, like so. Now, obviously, it's not always as neat, but you can see here, higher high, then we came in, formed a higher low. This is just about a higher high, albeit just, by a fraction of a pip potentially. But that is the final push from the buyers before the sellers then actually took control for the midterm before it started then selling off. So there we go. That is GBP/JPY broken down. A nice little short position to bring us through for 3.8R and around a 1.9% profit. Very good stuff. Hopefully you enjoyed that video. Hopefully that's broken it down a little bit for you now. And now we're going to look at high time frame applications, where I'll be showing you how to put the whole process we've learned into action to actually take trades like what I've been showing you in these example videos. So thank you for watching, and I will see you in a moment over in the high time frame application chapter.